After months of flying under the radar, gold is shining again. Hello and welcome back to our channel. My name is Daniela, and in today's video we are going to be looking at gold because the precious metal has picked up some interesting momentum in recent sessions after months of consolidating and having a bit of a lackluster performance. But before we get into it, please like this video, comment, subscribe, turn on your notifications, and as always, if you have any questions, leave them in the comment section below and we'll try to get back to you as quickly as possible. So they were saying it's been a few months of lackluster performance for gold. We've seen a lot of sideways consolidation, but all in all, we've seen a bit of a bearish tilt, especially since the beginning of the year, the end of December. We've just seen a bearish bias. We've seen dollar dominance, which of course has been weighing on the precious metal. We saw US yields also picking up. Now, remember at the end of the year in mid-December, we did see a Federal Reserve meeting where it looked like Jerome Powell was very bearish. He was kind of giving the impression that rate cuts would follow soon. And that gave risk appetite a push in markets. It pushed equities higher, but it also weighed on the US dollar and US yields, and that allowed gold as a non-yielding asset to push higher. Fast forward a few weeks in the start of the new year, we actually saw a lot of FOMC members coming out and kind of pushing back on those expectations, saying that market pricing had got a little bit too ahead of itself and that, in fact, the central bank wasn't ready to start cutting immediately, and the fact that there was likely to be less rate cuts than the market was pricing in, which at the time was 25 basis point cuts in 2024. So that, of course, weighed on gold. It allowed the US dollar to pick up some momentum. But over the last 2 weeks, let's say, since mid-February, we've seen small daily gains, which we'll look at the chart in just a second. But the technicals were starting to suggest that buying momentum was picking up. There was appetite to push higher. And then last week, we saw that bullish momentum actually take hold. Now, as I said, the majority of this, of course, because we've seen a little bit of a pullback in the US dollar and USD as well. And that is mostly on the back of recent data that we've seen. So we've seen weak manufacturing data, but also consumer surveys has come in pretty weak, and that kind of kicked off the rally. On Thursday, we saw higher than expected jobless claims, so that kind of gave a little bit of a weakness view of the US economy. And we also saw the PCE price index coming in line with expectations, but actually dropping in the month of January. So again, that's taking away some of the need or the perception that the central bank, the Fed, needs to continue keeping rates elevated now that inflation and the PCE, which is the preferred measure from the central bank, is actually falling once again. On Friday, we saw weak ISM manufacturing PMI data that kind of kicked off the rally. On Friday, we saw gold finishing the session up around 1.9% higher. That was followed again this week because on Tuesday, we saw factory orders coming in at the lowest level since 2020. In January, they dropped 3.6%. So that added fuel to the fire of this weakness in manufacturing and weakness in consumer spending as well. So all of that coupled together has kind of allowed gold to pick up some momentum on the fundamental side because markets are starting essentially to perceive some weakness in the US economy, which up until now, a lot of the data had been surprising to the upside, whether it's the jobs data, whether it was inflation, whether it was growth coming in higher than expected in the third and the fourth quarter, much higher than the European economy or the UK, for example. So up until now, the data has been coming pretty positive, which has been allowing markets to push back on rate cut expectations. But now they seem to be convinced that the data is supporting potentially some further action from the Federal Reserve. Now, they continue to state that they're data-driven and that there is caution in premature rate cuts. But nonetheless, markets are now pricing in a high expectation that rate cuts would start in June. And that is what is giving gold a little bit of leeway to push higher. There is, of course, some technical factors to that, as I said, we'll look at in just a second. But it seems to be an amalgamation of weaker data, expectation that the Federal Reserve is primed and ready to cut in June, regardless of what the data says, and also the fact that that has been weighing on US dollar and yields. has also helped gold. We've also got some other concerns out there. There's been further concerns with the banking system in recent days. We've had reports that we've seen issues or material weaknesses in some of the findings in New York Community Bank Corp, which kind of led to the shares dropping over 25% on Friday. And these material weaknesses found in internal controls have been, again, giving investors a little bit of concern. And as we know, if there's any concerns about growth or concerns about sustainability in the economy, investors usually flock to gold as a safe haven. So all of these factors are kind of adding up to allow the precious metal to push higher. So let's jump onto the chart now to see what it's telling us. So here we have the gold chart, Capital.com by TradingView. And as you can see here, the rally that we've seen over the last few sessions, kicking it off, really the momentum of it on Friday. But you can see here on Thursday, we already had that bullish appetite coming, ending the session a little bit lower from the high. So it's suggesting a little bit of resistance, hesitation from buyers to keep on pushing. But as I said, with Friday's data really consolidating that move higher, now coming close to all-time highs and also to that high that we saw back here on the 4th of December at 21.45 roughly, currently at around 21.30. So we still got a way to go. In yesterday's session on Tuesday, we did try to test those highs and ended the session lower. Again, definitely some resistance there from buyers and kind of, I guess, concern about the continuation and sustainability of the move. As you can see here, the RSI venturing into oversold territory. Actually, the most oversold it's been compared to the spike here in November and also in October. So the most oversold it's been since the March in 2023. So definitely something to consider for new buyers coming in. I think that's why we're seeing some resistance today as well, also to consolidate that move higher. We'll see what happens once the US session comes online, but definitely appetite to move in the short term. Definitely the path of least resistance looks to be higher. It's just a case of overcoming those concerns of the sustainability in the move. As I said, fundamentally, there looks to be quite a bit of support coming in. March is a very big month on the calendar. We've got the jobs data, US jobs data this Friday. Then we have central banks meeting kicking off on Thursday with the ECB. Then we'll have the Federal Reserve, the Bank of England, all of these factors affecting market sentiment in general. We'll also have the latest CPI data from the US later on in the month as well. So all of this is going to play its part. If everything points towards further weakness from central banks, most specifically the Federal Reserve, if the data continues to suggest that inflation is weakening and the economy is starting to see signs of concern, especially when it comes to consumer sentiment and, for example, manufacturing data, and that could lead the Federal Reserve indeed to cut rates in June as markets are anticipating. Anything that points towards that is likely to see the bullish pattern continue. If we start to see data once again coming in stronger than expected, starting to push back on those expectations of a cut in June, that will likely also weigh on gold, picking up momentum in US yields and in the US dollar. So it is going to be a playoff of how all of the upcoming data affects market sentiment and market expectations regarding the future path of monetary policy. But for now, technically, we are venturing quite into oversold territory. We could see some further pullback on the back of this as new buyers kind of test the appetite to push higher. But the path of least resistance seems to be to the upside in the short term. That is it for today's video on gold. Thank you so much for watching, and don't forget to subscribe to our channel.